One.
Summer markets, eh? Wrong. What do you want to blame it on? The yen carry trade, Apple, Warren Buffett dumping half his stake. We got some carnage in the markets. Is it preventing buying opportunities or even more sell opportunities? We'll have Todd Gordon on 8:35 to get his perspective on these wild markets. We got a lot of work to do here on this Monday on PreMarket Prep.
Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. Good morning, traders and investors. Starting out deep in the red, 172 handles at 52.04. Just made a low at 51.8550. If Aaron and I have done our calculations right, a 7% decline in the S&P on level 1, that was take us down to 5,000 today. I don't think we're going to get there, but I like what Aaron said. It's a good psychological level. The buck getting whacked down 55 cents, 102.44. Flight to quality in the TLT up 95 cents at 99.23. Crude sinking down a buck 50, 72.02. Gold getting shellacked down 41 bucks, 24.28. Silver under 27. That's down a buck 50. And Bitcoin futures, even with that, we'll see what the open is going to be with those ETFs. Bitcoin down $11,570 at $51,435. That's 18%. Triple D is here, and Triple D, everyone wants to know the most important thing. How was your fishing trip?
This is what happens. I go away for one day. I miss one day, Friday, and you guys can't hold the fort. You can't hold it down. You need my liquidity that bad. I don't have my liquidity out there, and it's over. There's no buyers. I was the only buyer, I guess. No, I wasn't a buyer. So, AB, come on in here.
Get out from under your desk.
And the
Get out
markets
from
fall
under your
apart.
desk.
And you want to know the craziest thing? I was so far north. I left on Thursday night. I was so far north, I didn't even have cell service or internet. So I didn't even know any of this had happened until, I didn't know the Friday carnage until I actually got back on the grid Sunday afternoon. I
saw when you got back on.
I was we're halfway to James Bay. If you want to look up on a map, we're out in the middle of nowhere on this fishing, and we won't talk very long because I know we have a lot to talk about. But the bass fishing, it was kind of fly-in lake. So when you got those fly-in lakes, it's an old fly-in lake, but we had a little four-wheeler trail. We had four-wheelers and bringing the boats, and there was 12 guys catching bass, smallmouth bass, like every other cast. It was really fun. So fishing trip was excellent. No cell service up there. So I spent all day Sunday when I got back just trying to figure out, this markets and how ugly it was going to be. And we knew we had a lot of catalysts for us to go down today, and the markets are not disappointing. So let's talk about some of those catalysts.
Yeah, so it's kind of a little bit of a blame game here where overnight you had the Japanese yen soaring against the dollar more than 12%. And if you read into it, I was reading about the yen trade from a few different sources this morning, and a lot of them are saying part of what fueled that is fears about recession in the United States. And then you read about why stocks are getting crushed today, and they're like, well, the yen was going crazy overnight. So it's a little bit of a blame game going back and forth here. Either way, the result is that the global markets have now entered this territory where it is, we were calling it a bloodbath last week. That bloodbath has intensified. And as you mentioned, Joel, the crypto market has just, completely sold off here. Bitcoin now officially in a bear market from its highs, down more than 20%. The Qs set to open down 5% today, which I don't know. I mean, you probably have to go back to the COVID market crash in March 2020, the last time you had the Qs getting ready to open down that low on a day.
Yeah.
And I mean, we talked about in the pre-market show as well. The other result here from all this is now you're also going to have some forced selling, some margin calls going on
Yep.
today. So
Yeah, you
either
will.
way, nothing pretty so far as we get set to open in the market this week.
Okay, so let's stop with the first point. You've still got the Japanese yen up there. Let's explain quickly, because some people may not know what a carry trade is. I got to go back to my university days when they were teaching this because I don't do interest rate differentials, but I took it all in school. So basically, easy summary: you borrow in low interest rate currencies, and then you take the proceeds, convert them over to a currency that has a higher interest rates. So obviously, lots of people borrowing in Japanese yen because interest rates are so low over there. Then you turn it around and you invest in a higher interest rate currency, and you get the difference. So if you can borrow in yen, I'd say 1%. I think the rates were even less than that. They were almost nothing for a long time in Japan. But let's say hypothetically borrow in Japan at 1, come over in the US, invest at 5. You pick up 4 points, free 4%, right?
Free money.
Well, the one currency strengthens. When you get a 12% move in a currency in one day, those little 4% carry trades, 4% over a year, don't look so darn good. So you probably have a lot of people blowing out on this saying, oh my gosh, I'm trying to pick up 3-4 points. I just lost 12. There's your quick summary on the carry trade. So that's crushing some people for sure if they're in there. I don't know why, do you think it's no risk trade? Oh yeah, I'm just making 4% guaranteed. And move. 12% overnight is a serious move. So I don't doubt that has an impact, a serious impact on the markets here today. Also, multiple catalysts. One,
let me say one more thing about that. I mean, it spreads to all the other currencies that had a higher rate. So exactly like the Mexican peso, right?
Yeah.
People were doing that. It's just, it's not
it's all
yen dollar. It's yen this, yen pound.
Yen versus Australian dollar was somebody was giving an example. I mean, there's it's all over the place. Not just done in the U.S., done everywhere. People borrowing cheap money in Japan. Well, cheap money in Japan might still be cheap, but all of a sudden those yen just explode in value and you got to buy them back. That's 12% overnight hit. So that's going to crush some people for sure. If you were in this, you're probably getting crushed on that if you were in that carry trade. So that's hurting some people. And then you get Warren Buffett annual meeting over the weekend saying he dumped half his Apple. So you knew Apple's going to go down big time even before the markets, did anything. You knew Apple's now down 8%. It's down $17. Got to be one of its worst days, like non-news days in a long time. And there is news, Buffett dumping. But, I mean, the overall markets, are not helping that cause either. So you got Buffett. And then Buffett was like at his highest cash point, he said, in a long time or ever. So Buffett,
he ain't buying. He's selling and he ain't buying.
Yeah. So now you're spooked. You don't have that vote of confidence there. You've had a market pull back and Buffett's like, I ain't buying it. And again, this is what we've talked about. Valuations just got too stretched. It's why, I sold a lot of my NVIDIA, most of it. I wish I would have sold it all, but I kept a small piece. But I mean, you look at this thing, these moves have just been insane. $40 to $130 in 6 months. It's too much. The moves were too much. And the last week, when NVIDIA rallied 20% in 24 hours, and I tweeted it out, go look at my Twitter handle. I'm like, if you're buying it now, you're doing it backwards. And that was just terrible buys. Anybody buying 120, 121 2 days ago are just annihilated. It's $92. So now you go in, and now you're getting margin calls probably too from maybe some retail investors who are all margined up. Maybe they were selling puts. Oh yeah, free money. I'll sell the 95s on it. I'll sell the 100s on NVIDIA for next week.
All day long.
I'll pick that up.
Long.
All day long, and then all of a sudden, boom, it's $92. It's like, what do you mean? I don't have that kind of money in my account. Oh, well, you got a margin call coming at your ass then. So lots to consider here. When markets unwind, they can unwind very quickly. Joel and I have been through lots of market crashes, so don't worry. Keep listening to Pre-Market Prep every day. We can navigate you through this. Am I dumping my long-term portfolio? I'm coming and saying, oh my gosh, it's over. Sell Tesla, sell it all. It's over. No, not doing any of that. Do I have some cash in my long-term portfolio? Yeah. I was telling you a few weeks ago. I sold my Oracle. I sold like 8 tech stocks out of my long-term portfolio. I sold majority of my NVIDIA. I sold my Oracle. I can't even remember the other ones, but I had a bunch of them in there. I sold a pile of them. Now, I'm still taking a hit. Don't kid yourself. I'm like fairly heavily invested still in the market. I think I'm 60% in, 40% cash. So I'm pretty happy I'm 40% cash. But, the 60% that I own stocks are getting hammered here today. So that's not fun. Nobody likes seeing their long-term portfolio down. My long-term portfolio made an all-time high on Wednesday. It's way off that high now. That's the long-term. Now, the trading account was sitting in nice cash in the fishing chip, and it's sitting pretty 100% cash. So I like that, so I'm getting hit on nothing on the trades. So bottom line, if you're investing on margin, I always never like investing on margin. I don't do. I trade on margin, but when you start seeing these breakdowns, you got to cut those losers. You can't, just hold through it all. So, I mean, if you're overnight and you picked up and you're down like 12% of video overnight here, you got to know, like, why were you in it? Were you in it for a trade or were you in for investment? You're in it for a trade, just took out the 100 support. You probably got to be selling into rips. But I think if you're coming and selling tech stocks when we're getting hammered down 5%, as much as you were doing it backwards when you were buying NVIDIA up 20 points there last week, are you doing it backwards and you're selling NVIDIA down 27 points in 2 days? Probably. So I'm not panicking.
No, and there's just a couple other things to go with that jobs number on Friday. Dennis, you weren't here. I mean, it's just a confluence of events, right? The jobs number, potential recession.
Tell me about the jobs number, because I was completely off the grid and I didn't even have time to read about the jobs number on Friday.
It wasn't
let's
good.
Just recap that too. AB might be able to recap.
Go ahead, AB. You want to recap that
from Friday's job number?
Yeah, just quick. Give me the 30 seconds Cole's notes for anybody who went on a fishing trip on Friday.
So last week on Friday, the U.S. employment report, we were looking for 185,000 jobs added in the month of July. We got 114,000. The unemployment rate was expected to stay at 4.1%. That ticked higher by 2 basis points, by 0.2% to 4.3%. You had hourly wages actually fall there. And there was no market reaction of like, oh, this is good for inflation, and maybe at the right
not
second
at all.
we got it, but as soon as we got that number, the market continued to sell off even harder. As now, the fears here have completely switched from sticky inflation to now, are we in a full recession? Is the labor market weakening that hard? And I mean, looking back on it in hindsight, it's easy to say now, well, shoot, the Fed had an opportunity to cut at least a little bit, 25 basis points last week, and didn't. And people will probably get on Powell and whatnot for that, which, there could be a case to be made. Like, are they being too careful, too data dependent here? Maybe, because I think a lot of people have foreseen this slowdown coming. But now it's interesting. I'll share my screen real quick on the CME watch tool here. In just a week's time, the odds now for a 50 basis point cut are up to 98.5%.
Ain't a quarter anymore.
No, you can see down here in the probabilities table, 1 week ago on July 29th, that was only an 11.4% chance. Now that's up to 98.5%. A 1.5% chance that we'll see a 75 basis point cut. And I wouldn't be surprised to see this number start moving higher today as well, so that a 75 basis point cut could be on the table coming again. Now, this is in September 18th. We have a full 6 weeks until that meeting. There's no meeting in August. So either way, I mean, some people have already started throwing the idea about an emergency rate cut out there on Twitter. So I don't think we're going to see that just from one, down.
This is not from Twitter, AB. This is from Jeremy Siegel, obviously. Wisdom Tree. We have, obviously, we have our other guest that comes on.
Jeremy Schwartz.
Jeremy Schwartz that comes on, who works closely with Jeremy Siegel. He was on CNBC about 30 minutes ago, and he's screaming for an emergency rate cut. I think, one, we respect, obviously, Jeremy Siegel and Jeremy Schwartz very much. But I think we're getting a little bit too excited here. One other thing to consider is that Jeremy Siegel has been calling for interest rate cuts for 1.5 years here now. I mean, I think that was definitely premature to say you needed to cut rates 1.5 years ago. I think we would have just, ignited more problems. I mean, the stock markets have been going straight up. So I think if you're saying we need the emergency rate cut, maybe you're looking at this Japanese carry trade. I don't know all the reasons, but I know he's been talking for cuts for a long time. Markets are getting hit hard here, but still give a perspective. I mean, let's look at where we are. SPY we're back to where we were a month and a half ago. Yeah, it's 20 handles down. It's crushed. But I mean, so we gave back 2 months of gains in basically 3 days. It's a serious down move. But we're still not at a point where, oh my gosh, like the stock market's crashing and everything's falling apart. The stock market was too overvalued. This is the correction that it actually needed. Are you guys still there?
Yep.
Everybody's leaving.
I'm back. I'm back.
Everybody left me. I'm like, am I talking to myself
You're saying things. No, I'm watching the market going down. I'm getting all this information coming at me at once. The other thing that I just wanted to say is we haven't even talked about the geopolitical situation, right? And I think that was a lot of the impetus for the sell-off on Friday. Besides the jobs number, you have Iran and Israel. I mean, they were, and the whole time I'm seeing the market go down. I'm like, well, did Iran, did the war already start? I mean, I thought that was the catalyst. So you have the jobs number, you have the geopolitical situation, you have a political situation in the United States with the upcoming election that is just utter chaos. I don't care what side of the aisle you're on that. Yeah. And then Warren dumping and not buying anything. I mean, you couldn't put together buying nothing. So you couldn't put together a string of events also on a weekend, right? How many times do you see these kind of things, on a weekend when the liquidity is less? So we're absolute in free fall mode here. We're down.
You know what was crazy too is last night the futures, the S&P futures. I'm looking at Apple down 6%. I'm looking at Nvidia was down 8% last night. I'm looking at all these things, and the stupid SPY was down 1.25%. It opened down only, Joel. I'm like, how is it only down 1.25%? I actually got shorts of SPY 526, 525 last night on the IB after hours platform, which they're just doing it against the futures. I was just taking it off. I took it off at like 516, 515 before we started the show. And we're down another 3 handle. Like, why did I take that off? It's 512. But I mean, that was just absolute stupidity for the SPY to only be down that last night. When you got that much chaos going on, all that stuff we just talked about, and the S&P futures last night opened down only 1.25%, you got to give perspective there. I don't know who's buying it up there, but they were on the wrong side of the trade. So now S&Ps are having an absolutely crazy, terrible day. But what do we do now? This is all new information. What do we do now? And that's why you've come to the show here. I think you got to know where you are and, why you're buying the stocks. If you're investing for your long-term portfolio and you got a 5 to 10 year time horizon, pick up good companies at reasonable valuations. Amazon, 155. It was 190 2 days ago. Not a bad bet. I've liked Tesla. You know that I'm not going to make it a Tesla show, but we're right back to where I was buying it in the 180 to 190. Wish I would have sold it all, and wish I would have, but I'm sticking in the long-term portfolio. I said I was going to dollar cost average into it. I'll probably buy a little bit more Tesla today. Just slowly keep wiggling in. I got 40% cash. It's time to put some of that to work in the long-term portfolio, at least a little bit. Not saying I'm taking 40 and going boom, but do you want to take 2, 3, 4%? Maybe take 10% of your cash holdings and pick up some good companies at reasonable valuations today. If you got a 5-year time horizon, I think you do. These are the kind of days that historically are pretty good opportunities. Now, as a trader, it's a completely different situation. If you're coming here and buying on margin, you're taking a lot of risk because we just went down another 5 handles on the S&P futures, Joel, as I'm speaking this sentence. So, I mean, you've got to know your time horizons. As a trader, I'm going to be chopping, buying, selling, hedging, keeping hedged. As a long-term investor, I'll be nibbling into some stuff today. I tweeted out, 3 stocks, that I thought, longer term. I retweeted somebody else. And they were saying Amazon, Tesla, Nvidia. I was like, those aren't bad stocks to nibble into today. I mean, I own all 3 of those already. Would I increase my position in these things on severe weakness? Yeah. Are we getting severe weakness? Yeah. So do I think I'm going to catch the bottom here? No, not necessarily. There's a chance I catch the bottom, but if you got a 5 to 10 year time horizon, I think there's a pretty good opportunity here today.
There's going to be plenty of opportunities, and
SMCI looks cheap too. Nick's saying that. I was thinking that too. I took a half-size position on it last week in my long-term portfolio. That's a pretty bad purchase. I bought it 690. It's 540. I probably will buy some more SMCI. I probably buy a little bit more here today, but I'm not going all in. You don't. I think going all in on these things. It's you got a lot of risk right now, so you got to know your own perspective. Like AB, you're a young guy. You thinking about going and buying some stuff today for your long-term account?
Yeah, there are a couple of stocks that I actually at the end of last week was starting to look at leaps on as ways to play some outside of just buying some of these stocks down here. I mean, Nvidia is set to open up down 14%. I kind of want to wait and see where this one falls before I come in and try to catch the falling knife.
You're catching falling knives.
The problem with looking at leaps right now is the VIX is so high that these option contracts are a little juiced up right now and priced pretty high.
Right.
So I'll probably just buy some common shares of some stocks that I do like long term, and then kind of just wait and see if I see an opportunity to start snagging some of those leaps that I do. Because as quickly as we've gotten this drawdown, we could get that capitulation point and start seeing some buying. And I'm not saying it's going to happen today, but anytime you basically have these forced selling events and you can get oversold pretty quickly, and that's where it looks like we're heading right now on a lot of these stocks. So I think once people kind of see how the landscape comes out, maybe Powell comes out and talks and starts easing some of the fears a little bit here. But I think long term, like any names that you liked last week, you shouldn't like them any less today just because their valuation have come down a little bit here. Now
you want them when the valuations come lower. I mean, this is the only reason I was selling Nvidia was a completely valuation thing. It started to get up to 42 times earnings, and it's trading with a lot of pull forward there. So when it started getting 120, 130, 140, it was simply overdone. So now it's coming back into an area where it's not quite as overdone. I mean, I think I'm going to get this at 60, 70, 80? I don't know if you're going to get it that low. So maybe you do want to nibble into a little bit back. Maybe I'm going to rebuy some of those shares. I sold like a month ago.
It wasn't even a month. It wasn't even a month.
Not even like 3 weeks ago. It was 132.
Yeah.
I could go look. I should go look at my trade confirms right now.
You should also
I could rebuy those shares. I wouldn't be against rebuying some of those shares here today. But again, not going all in and saying this is irrational, this is going down. We were so bubblicious on a lot of these stocks.
I know.
It doesn't just unwind in a day or two. And this is why I was saying last week.
Couple things though, Dennis, before you hop in. You look like people talk about capitulation, right? And trying to, identify that point right now. Wow. I mean, when I was joking about limit down at 5,000.
We're in a free fall right now, Joel.
Yeah,
we just dropped another 20 freaking handles in the last 5 minutes.
Wait. I mean, and sometimes you never know what the capitulation is going to be, but there's someone going down on this. I don't know, there's a bank or there's a hedge fund, or you just can't have these kind of moves where, something persists for so long. So I don't know who it's going to be. I don't know what it's going to be. I don't know what sector it's going to be. But then Goldman will come in and buy their assets for 10 cents on a dollar or something.
Warren will sit in his bathtub, drink Coke, figure out how to make some money from that.
Yeah, baby. Yeah, exactly. That's what I'll be waiting for.
You guys are absolutely correct, chat. Sorry, AB, DJKC. We are seeing margin selling right now. We absolutely are. This is free fall. You're seeing some forced selling here right now. Some people writing puts. It's probably the bloody naked put writers.
Yep.
They sit there and they're like making money.
This
just works, man. I just write puts. Market only goes up, and I just make money. This is the day you give it all back. You give back like 2 years of gains right here, you naked put writers. So I never write naked puts. It happens, man. It happens. You better have the money. So if you're writing naked puts, make sure you got the money in your account to buy the stock. Because if you're writing them and you're like, you got enough money to buy 100 shares of Nvidia, but you're writing 10 puts, you're going to be getting like, you're going to get some margin calls against you in a hurry in this market because they're all full on panic. Wow. That is it. I wonder if we had another headline, Joe. We just dropped like 40 points in like the last 5 minutes. I don't know. Like, we're obviously doing the show live here. So if you see another headline, this is impressive. This is fun to watch, especially when you're sitting in a lot of cash. Really fun to watch. But I will do a little bit of nibbling in the long-term portfolio today. That's all I'll say. AB, you want to say something too?
Well, I was just gonna say we talked about before it was official that Warren had sold Apple last week. That's what it looked like happened. Some smart traders and investors were looking at the situation and basically predicted that. And I was just gonna say, I mean, it takes a lot of like operational, I guess like privacy for Warren to sell that much of Apple and keep it like a secret until the weekend, to where it really didn't impact the stock. Like the headline didn't hit while the stock, market was open, obviously last week. I mean, that's
He was a master. Look,
impressive.
selling into strength. How many times do we talk about that? About selling into strength as opposed to weakness. And Dennis and I kind of go back on this before. I did tell him to sell the Nvidia maybe 1,000 times. Maybe I also told him to put a sell stop in to get on momentum. But he sold in unbelievable strength on that. Dumped half of his position. I mean, that is impressive. And then the other thing that we mentioned a couple of weeks ago, I think Dennis, more with you is like, there's just a buyer strike. I mean, the big money was looking to sell, but they're selling, but they weren't buying anything, right? And then also, I just harkened back. What was the Microsoft day yesterday or last week? Remember, it was down, and then the market came all the way back off that, and and I'm thinking to myself, that just makes absolutely no sense. And everyone's like, oh, that was it. That was a capitulation.
That
And
was
now,
so stupid. That Nvidia rally of 21% in one 24-hour period
24 hours.
is perhaps the stupidest rally of the year. The stupidest rally of the year. I flat out called it out on Twitter. And I said, if you're buying Nvidia up 21% a 24-hour period, you are absolutely doing it backwards. That was the absolute top. I gave you guys the exact top with my Twitter call with that tweet. And now we're $92 3 days later. That was the stupidest rally I have seen all year. Completely stupid. Everybody who bought that, you guys deserve to lose your money. All those people who called me out and said, it's going to go higher, Dennis, you're wrong. You guys are all idiots.
Customer service, our number one thing here at Benzinga.
But no, well, our chat's not idiots. The chat knows. The chat's smart. But everybody, I took a lot of heat when I said it was up 20. That tweet went around and got retweeted. I had so many people saying, you don't know, Dennis. This NVIDIA is going to change everything. It's going to go a lot higher than this. I was like, well, maybe it will 5 to 10 years, but I think you're going to get it cheaper. 3 days later, you got it a lot cheaper.
We got a nice bounce. I'm not calling a bottom yet. I did adjust 5101. And just to put things in perspective, folks, like, oh, we're falling. Look at this. Look at the monthly chart here. This is nothing. I mean, look at this. Look at this rally that we've had since late 23. I mean, it went nowhere near. I mean, I could figure a 50% on this one and stuff. So yeah, we're far from the high. But if you've been a long-term investor and you're looking, you're thinking, and like we also talk about time perspective on things, right? Where are you at in your investment horizon? Where are you putting your money, and what are you doing with it? So, at a relative basis, yeah, 5150. Well, I could have sold at 5,700, 5,600. Well, looking at it in perspective, at the end, we're still up on the year. We are still up on the year. Yeah.
Everything is. IWM, I think, might have just went down on the year again. IWM's back to being down on the year. Poor IWM. It was finally looking good. It's like, this is a breakout. This is the catch-up trade. Tom Lee is a genius. He's calling for a 40% rally in small caps. Oh, wait. Oh, no. Hold that.
Let's talk about stuff that money will be buying today.
Well, I was going to...
it's going to... I don't know if it's buying anything right now, but...
Joel, I was going to say, I mean, you mentioned earlier the geopolitical situation going on, which... there's a lot going on right now around the world, and you can, look at some different things. Obviously, I think what's going on in the Middle East is catching a lot of people's attention. If you pull up Lockheed Martin stock, LMT right now, and you see the move that's made over the last couple weeks, I mean, it's kind of like, a lot of times the market kind of makes these moves before things happen. So this is getting a lot of people worried that you're looking at the overall market crashing and Lockheed Martin up 20% in a few weeks. And a lot of people wondering, are there people out there that know something we don't know? Is this seen as a flight to safety? Is this, people just capitalizing on what could be a more conflict rising right now geopolitically, but Lockheed Martin is a stock that is getting a lot of attention now because in a sea of red, Lockheed Martin doing pretty well here.
But not Boeing.
One thing, okay, so we have a lot of experience, Joel and I, going through a lot of market crashes and stuff. One thing to consider is if you're flying in and buying stuff that's run here right now, when they start crushing everything, they'll crush all stocks. So I don't think I'm coming in and necessarily buying Lockheed Martin here today. Yeah, maybe, geopolitical risk is causing this to go, and maybe it's going to go up a lot more because of that. But you've got to be very careful chasing stocks here as well. If I'm looking in my filter, all the food stocks are getting bid up this morning, Joel. There, like Gilead's up. The QQQ algo's running nuts because all the tech stocks are killed so bad that they're actually buying the non-tech components of the QQQ. I don't know if I'd do that either. I don't think I'm coming in just like, I got to buy food stocks right now. I got to go buy defense stocks. I got to go buy all these other things. If you're that nervous about the markets, it's probably not the thing to just go and hedge yourself buying food. And that might bring us to Kellanova, Joel, because it's getting taken over. And just in this conversation, we might as well give you a little piece of news, or at least there's a rumor. AB, you got the headline, or at least I think it might just still be a rumor. Is this official deal?
Mars. So Mars, the candy company, of course, makes Snickers and M&Ms, is looking at a potential acquisition of Kellanova, the maker of snacks such as Cheez-Its, Pringles. Kellanova was a spinoff from Kellogg. The deal would be the biggest ever in the packaged food sector, given Kellanova's market value of around $72 billion, including debt. And again, like you said, Dennis, it's not fully confirmed, but there is reports that that Mars is exploring this deal with Kellanova, and the shares went up. Shares of Kellanova are up about 20% since it split from Kellogg last October.
But 22% this morning. Okay. Symbol K. It's not an official deal yet. Just, I haven't read because I have more important things than to look up the headlines on Kellanova right now because there's a lot happening here. But if Kellanova, it's not an official deal and you own this and it's up 22% on a rumor.
Oh, geez.
If it was me, we don't give investment advice on this show.
No,
I'm saying,
we don't.
if I own Kellanova, I would be hitting the bid as fast as I possibly could here. Now, again, maybe it gets taken over at 80, but it's going to be like a 50% premium. And then you got time value of money. And then you got everything else happening here too. This is a gift, man. Now, maybe it does. Maybe it just get taken over. It probably does. Wall Street Journal's credible and everything. And obviously risk arbors are thinking this is a done deal. Maybe it is. But I wouldn't take any of that risk at this point in time. I'd take my 22%. Say thank you very much, get my ass probably kicked in everything else in my portfolio. So let's take the 22% winner if I had Kellanova. That's what I would be doing.
Right, and it's trading at the highs. Yeah, I looked at it and I'm like, Kellanova, that sounds like Kellogg. You guys all know where that Kellogg's located, right?
Battle Creek?
You got it. That is getting it after 12 years. Battle Creek, Michigan.
Took me 12 years.
They're probably not giving out free samples, little boxes of free samples anymore. Cutting down on expenses.
They don't do any of that anymore.
Yeah, Mars is a private company. But on Friday I was on the Cortland Economic Report. I was talking in the afternoon, and I was like, this is worrisome. This is we've had a turn. We've had a turn in sentiment, and they're like. Well, what would you buy? And I'm like, man, oh man, oh man. And I'm like, bonds, or utilities or something like that. I mean, you have to look at the utilities trading up, like that. I mean, safety, get some yield. I mean, it looks like interest rates are going down. I mean, you talked about some. There are some stocks that are up today, Dennis. But
Mo, ticker MO.
Yep.
People still smoke in recessions.
Actually, Mo's down now too.
Yeah.
Well,
they were all up, but they hammered all those things now too. Everybody was hiding in food stocks, 2 hours ago, or getting crushed in those now too. Because you know what? When the market gets real serious selling, they start selling off everything. If it's green on your screen, there ain't a lot left. I don't know. I'm taking the profit.
Okay, we got a market veteran here. He is on the line, and he is joining us via the phone today. He's having quite a busy morning after swimming. So let's bring him in. That's Todd Gordon from Inside Edge Capital, and he's going to help us put this all in perspective. Aaron, could you go ahead and add him?
Yep, let's go ahead and let's bring Todd on. I don't see his camera on right now, but hopefully.
No, he's not. This will be a phoner.
Got it.
Okay, Todd, was the water 59 degrees or was the temperature outside 59 degrees?
Good morning, guys. How are you? Can you hear me okay?
Perfect.
Oh, sorry. I hate to do this especially this morning on the phone, but I'm rushing back to the desk. It was literally 59, Joel. It was freezing, but great way to start the morning and kind of get the mind right.
Okay, well, let's. You're up here with me and Dennis as far as you went around like me in 1929 or the tulip or the tulip mania here. But help prioritize things as far as the catalyst in your opinion, and whether or not things are getting overdone, perhaps.
Hey, yeah, I think the market kind of got hit by not a perfect storm, but it's getting hit on multiple angles, right? You got geopolitics, you got domestic politics, you've got, concern on AI spending, you have Buffett dumping half Apple, we've got Iran, Israel, tensions extremely. I mean, it's just, and plus you do this in August. You guys know, you guys are, old school veteran traders. You don't read too much into an August market. And, I've really been holding to that, not trying to overreact, because even before today, guys, like every stock that you guys follow, we're seeing 5 and 8, 9% moves last week. Like that's just, that was obnoxious, right? That doesn't happen in March or September. So, now have things changed? I don't know, possibly. We can go in a bunch of different directions. I still think earnings are good. I think the yield curve's coming out of inversion. The S&P is still going to do $250, $260 a share. What has really changed? The mood is foul. Sentiment is not good. There's a lot of uncertainty on the domestic political front. So I'm trying to take it day by day. I can't wait to get back in front of the screens and have a clear takeaway, but I don't want to overreact or panic right now because, again, it's August, and you guys know that better than anyone.
So how do you approach markets like this, Todd? You've been through some tough markets before. Do you just close your eyes, if you're a long-term investor, and do some buying, some great companies on sale here right now? Or do you wait for the dust to settle? Put on your long-term investor hat. Let's say you have that 5-year time horizon. What are you doing?
Yeah, no, you stay with it right now. And, I think we're going to make a few adjustments here. When I get to the desk this morning, we have a little bit of cash.
You're going to put it to work?
No, I'm going to put it in some short-term protection.
Crap.
Yeah, just short-term. I'm just going to try to dampen the volatility a little bit, but I don't think it's time to take evasive moves. Like I said, the market is forcing the Fed's hand. I don't like how Powell handled that last meeting. He was so dodgy about the September cuts. We haven't made a decision. He was almost defensive, and I think the market is kind of taking him to task on that. But again, Dennis and Joel, what do you guys think? Like, earnings season's been pretty good.
Yeah, it's been the reaction to the earnings, and the reaction has been, there's been some wild reactions, but pretty much it's sell the pop, and that was one thing. The Microsoft thing was very different. It dipped, and then they sold the pop. Were you with your Elliott wave analysis? I know time to time that you put some wild spreads and iron condors or something. Was there anything in your Elliott wave analysis that allowed you to put on any hedges, or just kind of sneak up on you too fast?
I'm going to be fully transparent here. I had an NVIDIA hedge on. I did a 115, 100 put spread in NVIDIA. Watched it trade down to 102. Didn't do anything. Closed it when it went back to 115, and here we are now 96. So yeah, I lost money on the hedge. No.
Okay.
No. But
the idea was there.
The idea Yeah. So, I mean, back to earnings. So we're doing kind of a deep dive on the AI spend, and we're looking at the Mag 7 in terms of how much they're spending, um, on the cash flow statement, how much it was impacting margin. And, we're looking at Apple, and I'm going to round out to the point here. Apple is spending about $10 billion on CapEx, and they're so shrewd and crafty. They're saying we're passing off the cost to our partners, and we're not investing that much. They have a big R&D bill, but in terms of CapEx, Apple's really not doing anything. And then Buffett comes out and trims half his shares, which really, really interested to know what's behind that. I mean, is he selling everything? Is it a firm specific thing? You Bank of America, like, is it a call on Apple? But I was seeing so much relative strength in Apple. I like the fundamentals. I think they're being very smart. They're keeping their CapEx spend down and passing off to their partners. And then Apple's getting caught up in this too. I don't think the story's changed there. I like the future. I like what they're doing. They're being pretty crafty and not tying up too much capital. I think the Fed is, again, the market is big time forcing their hand in this illiquid August market, and they're going to listen. And are they going to do an intra-meeting cut? Possibly, who knows? I mean, that's going to be a pretty big about.
Depends how ugly the markets get.
I think they're going to wait. I think they're going to wait for the August date. I saw something out from Goldman. I have no way to clarify this. I mean, what if this July that jobs report here, or the June, is it just a one-off? I mean, maybe then
I just want to interject, guys. We're getting some new information here right now, just in the last couple minutes, and I just want Gouldsby's on CNBC here right now, and he's talking very much like we need to cut interest rates. So obviously, when you get a Fed official here, he's on. He says the data does not look like the economy is overheating. This is why we just popped. If you're wondering why we just popped 30 handles,
Thanks, Dennis.
I think it's Fed's Gouldsby's on here right now. Inflation, I'm just reading the headlines from CNBC. Inflation is trending the right way. Employment's still in a decent spot. He seems to be talking very dovish here. So that's probably, getting the market a little bit, excited here. Why we just popped 30 handles in about the last 3 minutes.
I think Powell's done a decent job until that last meeting. I think he's trying to appear so agnostic to politics. He was so dicey. I really think he kind of discouraged the market, and maybe he'll course correct on that. But again, I mean, guys, we have yield curve coming out of inversion, right? It's not a bear steepener. It's in the traditional sense. We have yield curve coming out of inversion. We've got rates dropping. We're still going to do $250, $260 in earnings this year. I mean, I don't know. I don't think we should overreact too much into this August market. If it was March or September, okay, let's focus. But it's August 3rd or 5th or whatever it is. So I don't know.
Everyone in Europe's on vacation, right? They're taking the whole month off. Hey, Todd, could you do a little bit of a deep dive into this yen carry trade? I know you've traded more currencies than Dennis and I. And I mean, you love the blame. You put blame on anything, but the appreciation in the yen just over such a short time period, that's just putting heat. Can you discuss the carry trade and the unwind a little bit for our audience?
Absolutely. I'd rather not, but I traded for an FX. I traded for an FX hedge fund during the global financial crisis. And sorry, I'm standing on the side of the highway. I pulled off to a rest stop. You don't know if you hear the truck in the background, but yeah. So,
don't get run over.
No, I'm good. 06, 07, 08 housing market crash, right? Started here in the U.S., spread to the rest of the world, and post Greenspan slashing rates, everyone was taking yen out of Japan at 0.5% or 1% borrowing costs, and then investing in like Australian bonds at 5%, making that interest rate arbitrage. So that's the yen carry trade. So, generally it should be put on when interest rates around the globe are falling and volatility remains low. And then you have some vol spike event where everyone who is short the yen has to unwind that, buy the yen back, return that yen to Japan, which creates that buying pressure. But I was doing a study with the MAGS ETF over the various yen carry trades, Aussie yen, Kiwi yen, CAD yen, Norway yen, dollar yen. There's a pretty good correlation on that. So I think it was really just global macro guys trying to do that interest rate arbitrage. And what's crazy is, sorry, but everyone was bitching about the yen being too weak 2 months ago. Now,
Not the way it is.
now we're off, and everyone's like, "Oh my God, the yen's too strong." Like, literally, we're in an emergency situation because the yen was too weak and it was driving the Nikkei up. Well, now that course corrected, we have the dollar yen lower, which is weird for me because dollar yen traditionally correlates very heavily to the U.S. 10-year yield. If you throw dollar yen over your 10-year yield, you're going to see a really good correlation. And as I said 2 months ago, if you said the 10-year yield was going to drop below 4%, stocks would be bid. The algos would bid that up. Now it's different. Now we don't like the yen strength and dollar yen dropping and 10-year yields dropping. Now we don't like it. So, it's a really quick 2-3 month shift in terms of the global macro sentiment. And again, I think earnings are solid. The Fed's going to wake up. I don't think it's time to panic. So long term, 20 minutes later, Dennis, after you asked, I'm going to do a little short term adjustments just to protect damage and volatility, but I still like the rally into the end of the year.
Todd, I mean, right now, as the market is set to, open on its worst day since the March 2020 COVID crashes, I mean, what are your signs when you're seeing a sell-off like this that you're hitting a capitulation point, that there's a time now where, you can come in as a buyer and not be that scared of catching a falling knife?
What a great question. I mean, when I woke up this morning at 2 a.m. and I saw the futures down 5.5, and as the NQ, I was like, oh boy, here we go. I mean, we have to have, I don't know. Where are we, Dennis? Or how far off the lows are we?
Oh, not far. We're 20 handles off the lows.
Yeah, 30. But you know what?
We're down 220 handles.
Yeah, we had the margin selling come in. You could just, you could tell that the margin clerks are like, oh, could you get your butt in early, today? And then you could just see the dump.
Selling there for sure.
It was just indiscriminate selling. Yeah. We haven't heard about, any of, any big boys in trouble yet.
Terry,
we will.
Thank you, Joel and Dennis, for letting me dodge that question properly. But I think, you guys just answered it. It's going to be a sloppy process, Aaron. Is there going to be somewhere we step in and try to buy the lows? No, we got to wait for things to stabilize. We got to wait for the Fed to come in and do something. I don't know what single event it's going to be. I mean, look, we've had rotation. I love using the RRGs, relative rotation. We've seen the cyclical, more defensive trade come in, but even that's polluted. Utilities are bid right now. Why? Not because of defense, because there's so much power consumption being bid into it. There's some Utes, to go back to, my cousin Vinny or whatever. The Utes are so
love that movie.
Oh, so good. What's a Ute?
What's a Ute? I'm the judge. What's a Ute?
But so, I mean, we're seeing cyclicals rotate in. Healthcare's coming in, but there's some amazing breakouts in biotech, which is more risk on. So it's I don't know. I feel like we've got broad participation in the market, and I think Steve Eisman said it so good on CNBC. He's like, everyone's, the guys on CNBC were all my friends. So they're trying to get something out of them. He's like, one day they just woke up in July. They're like, I think I'm done with large cap growth. I just want to rotate into smalls and mids. And he's like, that's all it is. And so we got this big rally up in small caps, and still 40% of those companies don't make money. Yeah, okay, so we've got maybe the onset of 150 basis points lower. Are those zombie companies are they going to be profitable all of a sudden? No, because they still have to go to the banks and they're going to pay 4% borrowing. So, it's a summer move that just got hit from 4 sides, like Buffett, geopolitics.
Yeah, that's a good summary.
I don't know. I just don't want to freak out here.
Yeah, and it's not so hard to do. One last thing. I mean, it could just be machines, with this.
All machines. All machines.
Yeah.
I mean, but they rewrote the algo pretty quick, and they said sub 4% 10-year yield, sell it all. I'm like, wow, that was pretty damn quick.
Yeah.
I don't know. I mean, I think everyone's a little nervous going into this new age. Like, I've been spending a lot of time just reading and trying to understand exactly what the hell is going on with this new age of AI, and really trying to understand what Google is doing and how Apple's offsetting it. Like, I don't know. I'm not a technology guy, but it's
No,
pretty
it's tough.
crazy. I think very few people understand what we're actually heading towards. And I think that is part of the reason that Steve Eisman said, they're like, oh, I think I've had enough. Let's take it off. I mean, what's NVIDIA right now? Probably trading 35, 38 times next year's earnings if they haven't been revised down.
It's come down significantly here now from where it was, but still not cheap.
Yeah, but I mean, don't tell me they're not going to blow earnings out August 28th.
Yeah, forward
I hope so.
I know.
They better.
All right, Todd, we know you got a lot. We got to get back to the office and adjust those portfolios. Thanks for joining us via phone. Todd Gordon, Inside Edge Capital, giving us his perspectives on a historic day in the markets. Todd, thank you very much.
Thanks, guys. And sorry I'm calling in off phone. I hate this.
Well, no, it's fine, man.
It's great, Todd. It's great
it.
to hear from you. We always appreciate your commentary.
No, thanks for having me on, guys. All the best. Stay safe out there. Good luck, everyone.
Thank you, Todd. All right, guys, that was Todd Gordon, again, Inside Edge Capital. Always great to get Todd and his thoughts on the market, especially on a day like today where we need someone like Todd coming in saying he doesn't want to freak out right now, when it's, easy to do when you're looking.
It's never the time to freak out, but it depends on your own position here too. Again, if you were writing, naked puts and stuff, you could be freaking out. You probably should be.
Wait, look. Okay, so when we started this show and I pulled up the CME watch tool, it showed a 1% chance of a 75 basis point cut. That has now 20x'd to 20.5%.
In an hour? In an hour?
Yeah, in less than an
hour.
Wow. One day ago, it was showing a 0.0% chance that we would get a 75 basis point cut. Now it's up to 20%. You've seen, obviously the 50 basis point cut now. The CME watch tool is saying it's 100% certain that we will get either 50 basis points or 75 basis points. But this is what we were talking about last week. Though not all rate cuts are created equal. So 2 months ago, if we would have gotten a 50 basis point cut or, been expecting one, the market would have loved it. Now it's like, okay, well, when you're cutting because you need to, it's not necessarily as bullish. So, again, Goolsby talking today about an emergency cut. We'll see what happens with the market when we opens, if we're hitting circuit breakers or not. Like maybe they'll come out sooner rather than later and say they're willing to take action. The Fed is, but as of right now, it's just comments from Austin Goolsby on CNBC.
Yeah, I think so. I think we're leaking right back right away here once again. So obviously if the markets continue to collapse, the emergency rate cut becomes more talk for sure. I mean, this is one, it was a bad day Friday. It's a follow through bad day here. I think we see, if buyers do emerge, there is a lot of things on sale. Let's let the markets, dictate what the course of action for the Fed to a certain extent is going to be. I mean, again, though, let's go through some of these stocks. I think there's a lot of people sitting on some cash. So I think, there's probably a lot of people in our chat that aren't, sitting here invested on margin and, and in trouble here this morning. I think our chat's very smart. And I think a lot of them are sitting on a lot of cash. With something like Qualcomm at $150 here, Joel, or Micron even. I'm not saying I'm going and buying these. I have some Qualcomm. I don't have any Micron. But Micron, for instance, good example. This was a $157 stock a month ago, a month and a half ago. It's $86 in the pre-market here now. It just got cut in half almost. You're talking about 45% down. I mean, this was a stock that everybody had to have. And now all of a sudden, it's like, everybody has to sell it. I mean, there are some opportunities here in some tech stocks. Maybe you just want to go nibble on some Qs. Maybe I might do that today too. Down here, 420, just nibble a little bit of Qs in the long-term portfolio. But then, part of me thinks, well, valuations still overall aren't that cheap. Buy Qs and Apple, is still trading 27 or 28 times earnings. Although, wow, down 10% now, Apple. Bring up Apple. Joel, holy crap.
Yeah, that's...
It's down 10%. This is Apple, folks. Microsoft down 5%, but Apple down 10% here now. That's a huge move.
Yeah, I mean, the names
these
that you're
are
mentioning,
big moves for big companies.
The names that you're mentioning, Dennis, the Microns, the Qualcomms of the world, those are the names that if if some of the volatility subsides and the VIX starts to come low, those might be some of the names I'm looking at potential leaps on, because if I'm buying leaps on a company, I want ones that are going to continue to have strong earnings growth. So I want to kind of go where the strength is. Dell is another one that is on my watch
I bought
list.
that a little bit more last week. Big mistake, but look at it now.
Well, yeah.
$89. I mean, this full on gave its entire AI rally back almost. Like we were talking, this is an AI play when it was 80. It went to 180. Now it's back down in the 80s. I'll probably add to that. I'll probably add to it. Never found average down. Maybe I'll add a little bit back into that too.
That's filling a gap here. 94.80 by over $5. If you want to take a look at that one, I just want to note real quick on the Apple. It's not going for these. It did not go for that head fake rally at all. I mean, look at that. You know how the Spoos had that nice chart. No, it just boom. It is just sitting on the lows of the session.
Down to the low too.
Yeah, I mean, I want to bring up. I want to talk about probably the biggest risk asset that this market has. Bitcoin. Yeah.
Just real quick before we get to Bitcoin, Robert in the chat was asking what a LEAP is. It's actually an acronym that I don't know. I forget what it stands for, but it's long expiration option. So it'd be me buying like calls on Nvidia that are, a year out,
2 years out.
Basically just betting that
long-term options.
Yeah, long-term options. All right, let's get to Bitcoin.
Okay, Bitcoin. There you go. Down 20%.
We can look at micro strategy too, which is, no surprise, getting absolutely clobbered this morning, down 24%.
I mean, you talk about things, you talk about high
levered play on Bitcoin.
Yeah. You talk about, high valuations and, them coming in. What's the true value? How do you value that? That's one thing that's, kept me out of the thing. How do you value
There's no intrinsic value there to Bitcoin. You're just buying it because somebody else wants it. We've said this all along, but doesn't mean it isn't worth anything. I have a little bit of Bitcoin in my long-term portfolio too, because people just, are like, that's the new crypto gold type deal. I got talked into it too. And that's been pretty good for me, actually. Not good today, obviously. I don't want to go look at my Bitcoin holdings, I don't think, today when it's down whatever it is. But MSTR is a levered play on Bitcoin. So on the good days, it's going to be doing awesome. On the bad days, down 24%. Wow. These moves, I'm just kind of jaw-dropping because we're doing the show, and they've got a lot worse in the last hour. I'm just looking at what the prices are trading. Like Apple being down 10% is a jaw-dropper. Poor Kathy Wood, she finally was starting to show a little bit of life last week, and she's back down, and she's approaching like multi-year lows here. Like she's going back down to like disruptive technology. Holy macro, man, that just has not worked. But I mean, ARKK is $37. The low back in October of 2023, when everything's washed out, was 33. I mean, then you got to go back into 2022. She's giving back, her last year and a half of gains, which isn't even great for her because she's been underperforming the market. So it's crazy that she underperforms that much. And when the market goes up, she doesn't go up that much. When the market goes down, she gets hammered. I mean, holy macro, it's just everything wrong there.
So, all right, catching a bid here a little bit.
Dennis, you mentioned earlier, you were talking about nibbling on the Qs, but then you're like, well, the valuations are still a little bit frothy.
Yeah.
Not as frothy as they were a week or 2 weeks ago. But out of the Mag 7 stocks, Tesla still has, from a valuation, from a multiple standpoint, still
expensive.
Still the most expensive.
Oh yeah, we've talked Tesla being, very expensive, stock. I've said that it's 70 times earnings. It's very expensive. I just think they're doing so many things that the revenue streams are going to come. But this is not the kind of environment where Tesla's going to be killing it. I mean, it's going to get crushed too. It's a risk asset, so it's no doubt it's going to get crushed as well. So yeah, I have a big holding in Tesla. I'm getting hammered on that today. I'm getting hammered along with you guys. 60% of my money is out there. So, and I'm getting hammered too. It's not fun, but 40% of my money isn't out there. So I'm like thinking, but a little bit more of that to work. Again, you got to have your long-term time frame. I have no trade, no swing trade on, no day trades really on here right now. I had some stuff this morning. I'm out of most of it now because I was on vacation, obviously. So I'm sitting here with just a lot of cash and thinking, what am I going to do with that? If you're sitting here and you're fully invested, I mean, if you're an investor with a 5 to 10 year time horizon, you're probably like with Todd, you're probably riding it out. But if you're an investor sitting with a lot of cash, I think why not put a little bit of it work today? I'm not against buying a little bit more Tesla. Maybe it's going to continue to go down. Maybe we're going to crash. We know nobody has a crystal ball. Nobody knows anything. We just, are taking logical bets. So
And
you've got to
there,
be, but this is why you got to be diversified, folks. This is a whole lesson into diversification and asset allocation. You know what? It's always great when the market's going up. You're like, why didn't I have all my money in Nvidia? Or why didn't I have all my money in Tesla? I mean, well, this is why. Because when risk happens, and risk happens fast, you want to, have some cash to sit on to maybe be able to put to work, bullets in the chamber to be able to actually come into this market. But two is you don't want to get like just hammered on one stock. Like I own Intel. I would have got, if I had all my money in Intel, I'd be really hammered. That's terrible. You got some Intel too, Joel. That's just an epic disaster. So I mean, diversification. Okay, so I've had 2% of my money in Intel. Well, I lose like 0.5, 0.6%, when it has the big fall of my account, but I don't lose 21% of my account. So I think everybody's getting a hard lesson here right now. And one, not investing and just writing naked puts and being on margin invested all the time, but two, in diversification. And this is a good thing. This gets the froth out of the market. It gets the speculation down. I think this is a good thing overall. I think the market needed this.
Yeah. Get the week longs out of there. But what we have here is, I'm just going to look at the S&P. We are 30 handles off the pre-market low. So that's a good thing. So if you're looking at this and, I'd necessarily hop it in first, 15 minutes, a half hour, let's see if that pre-market low is protected. And if that pre-market low is protected, then there is absolutely no resistance on this market once it starts going up. There's because we just came down through a whoosh, and we will go back up the same way. If that pre-market low is breached, man, oh man, limit down is 7%. That would take us down to 5,000.
I don't think you're seeing limit down today.
I'm
going to say it right here. I don't think you're going to see limit down today. I don't think we're in this environment. Maybe I'm wrong. Maybe people are just a lot more on margin. Maybe this yen carry trade is going to hit a lot harder. Maybe there's just, a lot of people with naked puts out there, and there's going to be margin calls all over. There's some margin call selling happening for sure. But I don't think it's I don't think this is like the, event where it's going to take us, and where markets are, going to turn from being down 4% to down 7% to down 10% and whatever else the breakers are after that. I kind of feel like I wouldn't be surprised if some of the weakness, actually, if we do get some buyers coming in. I don't think we're getting back to green or anything today, but I wouldn't be surprised if we stop going down and maybe actually start to find some buyers. Because man, I look at some of these tech stock prices here. I mean, we're back to we're at the beginning of the year on some of these stocks.
Jaw dropping.
Yeah, I almost
these are good buys. Some of these might actually be good, even from a valuation perspective. Some of these might be getting a little bit more attractive here. I mean, Amazon's down $50 in a month.
And
that's a big move.
I will mention real quick before I wrap up the show, we do have a trading competition going on. Zunaid pinned that in the chat. I'm going to throw that link in the chat one more time. This is from Trade Zero. So a little paper trading competition here. And with the VIX so high, there should be some opportunities there to get in that competition and make some gains there at least. And, while the real portfolios are probably suffering today, and there is some cash prizes and whatnot available there as well. The odds for this 75 basis point hike continue to move higher. Something I'm watching. I was just going to say, if we do see those circuit breakers, do see the limit down stuff, I almost wonder if that's better than having just a sustained sell-off all week, kind of rip the Band-Aid off quickly. Maybe it gets the Fed involved quicker. Maybe you hit that capitulation point earlier and you start seeing some of that fear selling and some of the margin selling subsiding. And so buyers can come in and start taking stabs. Like you said, then it's at the names that are actually showing now reasonable valuations. I did have some good data on all the different Mag 7 stocks in terms of the valuations and growth rates right now, but we are running out of time. So I'll save that for tomorrow. Tomorrow is a Tuesday, which means it's a T3 Tuesday. We will have David Prince join us, and he's going to be a great person to talk to as these the volatility in these markets continue to get crazy. But guys, do you have anything we want to wrap up with today?
We got a little bit of a rally going. That's all I'm going to say here. So looks like that pre-market low, man, we're up 50 handles from it. So I think if you want to lean on that, obviously you're going to have to use a little bit bigger stops today. trade a little bit less size, you're still going to get your bang for the buck. I don't even know if you can talk about a 50% retracement. I don't know. Just for some, this thing could go back into the 5,200 handle and then, and then crap out again. But right now, at least we found a temporary bottom here at 51.20. And that's just above a low that you had back in just May 1st. I mean, folks, it's not the end of the world here. We're just back where we're at
I
in
know,
May.
like, and again, I guess it's how you're positioned. I mean, somebody was saying they're down 20% across the board in the chat. And I'm like, it's a tough thing, when you're down. I guess they've got some options and stuff too. It's down. We're down 3.75% on the SPY. It's an ugly day. You're down 12% Nvidia. It's an ugly day. I have a little bit of Nvidia. I'm down 10% Tesla. I'm going to lose some money today. In my long-term account, my retirement account's going to lose some money today. I mean, but you know what? This happens. It's so absurd that we went 350 trading days without a 2% drop in the S&P. Absolutely absurd. This happens. These risks happen. And usually they turn out to be decent buying opportunities if you've got a long-term time horizon. So that's all I'll say.
Bulls make money, bears make money, pigs get slaughtered.
And if you're sitting, and you're margined out, invest in the market, I'm sorry, but today you were the pig.
Yep. All right. Well, again, hope everyone can somehow survive this bloodbath out there. I mean, better safe than sorry if you're looking at buying names today. But we'll see what happens here on the open. Thanks for everyone who tuned in on pre-market prep with us this morning. Again, we'll be back with T3 tomorrow, 8 a.m. when all this craziness is going on. You guys know where to go to get the information to stay on top of everything. We will see you guys tomorrow morning.